very, very, very well, ladies and gentlemen. So welcome back to another cast with Trend Following Tyson. And let's put this October pullback, bearish sentiment state that we're in, so to speak, into a proper perspective. So the market's pulling back. I don't panic because I have a game plan. I'm a trend follower. Actually, I prefer to take some pullbacks. I prefer to take some pullbacks towards some support levels and some reversions towards some trend lines and back to the means and things like that. Okay, because it's better for me to buy trends at the trend lines or at support levels rather than buying them at the top of channels or at the top of levels where they're liable to come down and kind of skew things. But still, nevertheless, we'll be sitting tight with our winners. So we're putting October in a proper perspective, and let me say one thing before we get too far ahead. Buying pullbacks and long-term uptrends is the default trade. That's word from Larry Tintorelli, and that's something that I couldn't find it to be any more factual than anything that I've seen in the market. I mean, that statement is so factual. I can't even give you any more goods on that besides that. But it's a true fact, and we're kind of living by it, living and dying by it here on this analysis. So buying pullbacks and long-term uptrends is default trade, and we're going to see exactly why. But before we do that, thank you, Larry, for that very beautiful piece of knowledge that is very much in existence today. But let's take up a word from Bruce Kovner, one of the greatest trend followers, and we did expound on some of this last week. But I had to bring this back because this is exactly what we're dealing with right now, and this is how we're going to approach this. Like I said, I think that the market, and I think that your psychology in the market and your psychology in real life has a lot to do with you know your mental makeup will have a lot to do with your success in the markets. And as you guys heard from really good traders, your mental capital is just as important as your actual your physical capital, like your money capital, your currency capital. Okay, so your mental capital is just as important as your actual currency capital. So let's be strong-minded. So this is built for the stronger-minded individuals. Okay, so let's go about this in the correct manner. Let's not break down because the markets are pulling back. Let's have a game plan and let's execute. Okay, so let's take up this word from one of the best ever, Bruce Kovner. Risk management is the most important thing to be well understood. Undertrade is my second piece of advice. Whatever you think your position ought to be, cut it at least in half. We don't have a choice. Like I told you guys, we're using 3 defense mechanisms right now. First, we're going to undertrade. Second, we're going to undertrade. We're going to stick to 1% risk management. And 1% risk, okay? 1R, we're sticking to 1% risk, okay? In addition to that, we're going to be stopping ourselves out where the trend says it's invalid. Now let's get to that. Okay, so cut your positions in half and undertrade right now, especially in this time, is going to be a beautiful defense mechanism that we're going to be using while the market is in this sort of bearish state. But in my opinion, I look for pullbacks and long-term uptrends in this, and I'm not just looking for pullbacks, but I'm looking for some continuation inside of these pullbacks, and then we're off to the races. I'm going to relate some charts to you that show just exactly what I'm talking about. So first rule of trading, there are probably many rules, is don't get caught in a situation which you can lose a great deal of money for reasons you don't understand. The reasons you would not understand why you will be losing a lot of money is probably not having a stop where you should have a stop at, and not having a predetermined stop, and not risking 1%, not having your trade fully thought out, and having a consistent and profitable, really concise, consistent process. And we just nail processes here all day. Listen, it's process over proceeds, process over proceeds, process over proceeds. That also I learned from Larry and Michael Covell. Okay, but process over proceeds don't worry about chasing the money, because when you're worrying about chasing the money, it's going to force you to make decisions, bad decisions that are money-based decisions. We need to be making decisions that are based on our process. Rather, we cutting 1% here, we're getting out of the trend here, we're entering the trend in this position, we're getting out if the trend goes to this position. All this stuff is well thought out. It's not just some flick of the wrist, okay? So let's get to the last quote we got from billionaire Bruce Kavanagh, whose these trend following words are breathing life. Place your stops at a point that, if reached, will reasonably indicate that the trend is wrong. Place your stops at a point that, if reached, will reasonably indicate that the trade is wrong. Rather, not the trend is wrong. Not a point determined primarily by the maximum dollar amount you're willing to lose. So let's not stop ourselves. Let's not base positions based on how much we can buy, No, let's base our positions. Remember, defensive traders, defensive fighters like Floyd Mayweather, that are the greatest fighters in this era, right, are defensive fighters. They're not fighters that are running into the ring looking, oh, let me see everyone I can knock out. No, he's a defensive fighter who's never lost a fight, okay? So let's approach this thing in the same manner from a defensive aspect. So let's stop ourselves out where the trend says it's incorrect. Rather that be the support line, rather that be a support zone, or rather that be a trend line. Okay, or rather that just be price itself. That's in relation to the trend. Okay, so beautiful stuff from Bruce Kavanagh. I really couldn't ask for more. If you guys can't pick up these jewels from, if that's just like asking somebody, hey, I want to know something. How'd you make that $1 billion? And he says, well, this, that, and the third. And you're like, you're too stupid to even understand, because you can't pick up this basic knowledge here. So let's pick up what we're given and let's take it and run with it. Beautiful stuff from Bruce Kavanagh. And let's jump into the trend picture. So buying pullbacks and long-term uptrends is this. Let me show you what I'm talking about. So we could have bought pullbacks here when we showed buying pullbacks. Here's a pullback, but when we start seeing signs of continuation, closes above higher highs and closes above. Here's the pullback level here. Of course, you gotta wait. You don't just want to buy everything. You want to wait to see what these pullbacks start doing, and when they start closing, when this SPY started closing above this level here, you could have bought it. Okay, when the SPY started pulled back in this area, look at all these pullbacks that are basically the best positions, to the most profitable positions. Okay, you could have bought the breakouts. Of course, you could have bought the breakouts and sit tight. But of course, as soon as you bought those breakouts, they started to pull back. So you had to buy those breakouts and sit tight. Instead, you can buy the pullbacks with some continuation and you're already green. Okay, if that makes sense. So if you're buying the breakout, the breakout's breaking out, but it's kind of like a false breakout. It's breaking out and then it's pulling back. So instead of you buying a false breakout, let's just to avoid that, we can just buy the pullbacks and long-term uptrends. Buy these pullbacks with signs of continuation. Buy these pullbacks with signs of continuation. Buy these pullbacks here with signs of continuation. And what do you think we have here? As soon as we start seeing continuation coming back into this SPY, for all you SPY traders, whatever that quantifies or whatever that means to you, you know, it's business as usual. This thing always pulls back and continues. And it's the same way I look at all my stocks. They always pull back and they continue. So let's jump into the trend picture. And I've seen gold on the rise. Of course, I follow price, so it always shows me what's on the rise and what's not. And, you know, it keeps me out of a lot of trouble. So AU on the rise here. I like this gold thing. Angola gold. This is African gold here, where gold is actually built, where the main manifestors of gold coming from Africa there. So Anglo Gold, Ashanti Limited, beautiful stuff here, breaking out of this space, and you see this gold kind of speaking up for itself here. Kind of one of the more consistent things, especially in this 5-day period. You see when the markets were absolutely horrible in this last 14 days, the last 5, 7, the last 10 trading days for sure. But look what this thing did in the last 10 trading days. Okay, absolutely just beast mode. And then it's getting ready to break out of this zone here, so you can set yourself a breakout. And then remember, we're trading with the trend. Trading with the trend will be stopping yourself out where the trend says it could possibly be invalid, and that's down here 940, and then give yourself some buffer space at 930. Okay, AU looking wonderful. Let's keep it going. AMRN, this is not going to be very thick. This is not going to be very thick, and all we're looking for is for some continuation inside these pullbacks. Okay, we're looking for some continuation inside these pullbacks. Okay, as soon as we get these continuation in these pullbacks, we're off to the races. So I like this AMRN. Remember, we were looking at this thing for a long time now, and I said, remember what I told you guys, we gap up, and once prices gap up, then if price continues, then we follow price. We don't just buy anything. Okay, so prices are continuing, and I still like this. I like to buy this continuation here. So I like to buy this where we're at now and set yourself a stop out. This is going to be your first support zone, but give yourself some buffer space at 17.75, and then another space at yeah, stop yourself out below 18 here, okay? And then 18 and some change, all right? Okay, so AMRN looking wonderful. AMRS, which is odd, but they're not related at all in any way, shape, or form or fashion. These are two totally different stocks. So you guys, it's gonna be a slow grind. Trust me, it's gonna be a slow grind. But remember, all the greats, none of the greats made $1 million in their first 1, 2, 3 years of trading. Okay, so this is only built for the mentally tough. So let's create some wealth here, guys. Let's do some good trading, and let's stick to a profitable, solid process. I like AMRS, but I wouldn't be buying this right now. I'd like to see what happens when this thing continues and what it's going to do, and if it's going to decide to make itself up here. All right, so when this thing starts to close above 780 and then close above 8 and then close above 820, I consider some buys, and then consider this as a continuation to come towards this price. So I like that thing. And then, as I showed you guys before, this thing has some major prices it can jump into, which is why it keeps denying this 10. Once it gets over 10, it starts getting into some major prices. You see all these major prices up here in the chart. Okay, so AMRS, we always look left. We learned that. I think that was Sunrise Trader. We're always looking right. We're always looking left to see what we can do right. So we're trying to knock prices down like the domino effect. Okay, DNR, of course, we were trading this thing way back at 274, you guys. Way back at 274. Look at that long at current price, 274. All right, shows you all about the trends we follow. All right, remember I told you guys we're long on this thing before 3, so I like DNR for continuation. I just like to see what's going to happen with this thing, okay? I just like to see what's going to happen. It pulled back here, and as you see, it's already starting to set some higher highs. So I'd like to buy this thing as it's already kind of in the locomotive here, and kind of see if it can start setting higher highs above 590 and above, get back into 6, and then that thing's on and moving. But of course, in my opinion, this thing's not going anywhere. It's just a beautiful uptrend that's been carrying itself on for quite some time now. So I'd like to just buy the pullbacks there. And if you look on, as you see, I panned out, and you're already seeing some green coming in here. And as you see, all this thing has pulled back, kind of came in this zone, but this thing always sets higher highs, pulls back and sets higher highs. Okay, so DNR, I like it for continuation throughout this little phase we're in. I know YGYI was on the last show, and it just looked really good. And of course, we always look at good stocks for good reasons. The longevity here, just for continuation. I like this thing for this trend to just keep it moving here. I think I was looking at this thing before I had a chance to bring it back to you guys. But I like it long. I think it was in this area here, and I said I was thinking I liked it long, and it had already started setting over 312 and such forth. So I like this for continuation. YGYI. All right, see what this thing here can do. All right, YGYI for continuation, setting higher highs above these areas here. All right, see, I see it's already holding up this thing, and then came back, pulled back, and it's setting up here. So continuation on YGYI. YGYI, sorry. So let's see what we can do here in October. Let's keep it fighting, guys. All right, let's just keep trading defensive, keep trading smart, keep protecting our ass. Okay. NOG, I really love this thing right here for continuation. I don't love it, but I really like it. It's got market cap. It's got a nice trend right here, and I like it because it's oil and gas, and I just like this thing. This is a pick for me right now. NOG, I'm long this. I started adding in this area here, I believe 360. So I'm long this thing, and I like it for continuation. I just started adding in this area here for it to hold up these prices and kind of keep this uptrend pullbacks and continuation going. Okay, so I like that NOG to be one of the stronger stocks for us to follow for a few months here. Sit tight. Don't have a very large position. Remember, only have your stops below the trend picture, okay? And the trend here is going to be 350. We're going to be getting out below 350 at 340, okay? All right, that's where it should hold up based on the trend, guys. Below 350 and 340. That's what we're going to give it. That's the last place it bounced at. If it's not going to hold that, it may have some lower levels to drop at. And we're not going to be sitting tight while this thing figures out how far it wants to drop and what it's going to know. We're just, if you're not holding, if the trend's not going to hold up, we're not going to continue, then we just can't do business. And that's just simple as that. I like CALA on this yearly. I like CALA on this yearly to just start curling and knocking down prices here. You see some huge numbers on this chart. We're piercing this 100. We're piercing the 200-day moving average and the 200 and the 20 getting ready to cross. And you guys know when that 20 and that 2 cross, that's like love making magic for a stock. So definitely follow that. You guys know our story here. Don't follow news. Don't follow anything. Just follow price. Okay, that's just like anything in life, right? Shake out the noise and just give me the goods. Don't give me the nonsense, okay? That's what following price is about. For all you people that are probably not into that kind of stuff, you're kind of like a lot of other things to contradict what you're doing here. But me personally, I like to kind of get down to what the rut of what we're doing here. So I just like to follow price, and following price will never lead you wrong. So we're like CALA for continuation. Definitely the signal, one of our home run signals is just this curl right here in price, and then we start knocking down things on charts to the left and we start heading up. And all right, so I like CALA for the momentum it's showing in the continuation. Just a few more tickers here and we're just about wrapped up. Let me give you guys some more gold stuff that's kind of showing its face here. All right, showing some consistency, and I like to follow consistency. Once I start seeing some inconsistency, I'm like, whoa. So I don't like to deal with a lot of inconsistency. I like to follow consistency in price. So here we are with this SAC Bridge Gold. When I hit my scanners, guys, this is what's showing up that's performing right now. This is where the momentum is at. This is where the consistency is at. So, you know, as you see, this thing gapped up on the 24th back here in September, held up that gap, and then still moving inside of all this, whatever's going on inside the markets. Remember what happened. Let me make a valid point to you guys. What happened last time, you guys, when the tariffs and everything first started? We were in a really bearish market, right? Everyone thought the market was going bearish, right? Or am I lying? Am I just making that up? No, I'm not making that up. The market was bearish. Everyone thought the market was going bearish. Everyone was selling off, and short sellers and perma bears thought that they ruled the world at that point. But what happened? Stocks continued to be bullish, and we still, S&P still set higher all-time highs after that. Okay, so just look back at any one of these good stocks and see if you should have bought those pullbacks. Look at any one of these good stocks and tell me if you should have bought those pullbacks. So you think the market's crashing now and that's it? No, there will be higher highs. There will be new all-time highs. This is not the end of the road. And from my position, the way I look at things, it's just an opportunity for me to capitalize and follow price. So following gold right now, something that's showing itself. I like that SA thing. Okay. Follow that. Give you guys SBGL, Sibang gold, another African gold thing here. A lot of African gold showing its face up. You wonder why everybody is fighting and carrying on. Boy, that thing got so much gold over there, you'd be surprised. And other riches and diamonds too. Not people just don't want to be over there to twiddle their thumbs around. There's riches and diamonds over there, all right? So, this gold coming from Sibang looking really well, okay? Starting to curl up here on price, and I like what this thing is doing. Looking pretty decent. So higher highs and lows coming in, curling up here on the 6 month, knocking down things to the left of us over here, knocking down things to the left of us, and we'll just see how much more things we can knock over on the left. So let me tighten up this picture, give you some prices. Look at that on the 5-day, just strong as hell on the 5-day, you guys. Gap up here in price and then continuation. This thing wouldn't gap up for no reason. We're not seeing a lot of gap up in golds for no reason, okay? So don't argue price, just follow price. A lot of guys, a lot of people on my Twitter, they kill me too, and they're like, well, why? What about you know, they have all these hundreds of questions, and I'm like, look, I buy stocks in the top right. I follow continuation. Okay, it's not rocket science. Okay, I buy gap ups and I buy momentum and I follow continuation. So if things are gapping up, I don't question it. I don't go look in the news. I don't have 100 reasons why things are gapping up. I don't question the market. Okay, I just trade with the market. All right, you're always going to be wrong when you start questioning the market, when you have your own theory for things. Okay, don't do that. Just trade with the momentum, trade with the wave. We learned that from Ed Psychota. Trade with the wave. Put your hands in the water, and if you feel the motions of that ocean, if you feel the motions of that wave, you should be trading with, you should not be trading against it. And when you start questioning price, you're trading against the motions, okay? Don't do that. That's going to be harder for some of you people that know everything. That's not good. That's not for people that like to learn and that like to quantify and like to expand themselves. That's not for you know-it-alls, okay? That's more or less for people that are going to like to learn and expand themselves. It's not for people that know everything already and that can't be taught anything and that can't learn anything and that are always right. Let me make another point. The people that always have to be right in life are the people that are going to be giving a lot of money back to this market, because the market, you can't make your decision, say, oh, I'm right here, and that's it. No, the market makes a decision, and you have to follow it. You have to follow that price. And the second you start arguing with the market, that's the second you go red. And the quicker you make an agreement to what the market is saying and you get the hell out where you should be, or you go long where you should be, or you ride the motions in the ocean, quote unquote, where you should be, the better off you'll be, the more profitable you'll be, the more you'll be trading with the trend. You'll be trading with the predominant. Okay, so I like this DERM for long, for it to continue and kind of hold that thing up, and you already see some continuation there. So on this pullback, and I don't need to go back to this chart and show you all the pullbacks and continuations, okay? So DRM for continuation, I like to buy that momentum with a stop below the trend. With the stop below the trend. Don't argue with billionaires. Don't argue with billionaires, okay? Just do what they say. Don't argue with greatness, just mimic greatness. All right, if you were a boxer and you say, hey, Mike Tyson, how'd you become the best boxer of all time? And he gave you the story, what would you have to do? You'd have to shut up and you'd have to listen, right? All right, so trade with this thing, all right? DRM with a stop below. Just listen to what Bruce Kovner said. Trade yourself with the trend, okay? DRM for continuation with a stop below 11. ENDP, and this is going to be the last stop before I rack it up. You guys check my show out on Saturday, this beautiful Saturday. And it's beautiful here in Phoenix because it's raining. We don't ever get rain here. And you guys enjoy your Saturday, however it is, but you guys enjoy it watching football, and let's wait for the markets to continue, and let's trade with the markets. If the market's going to continue to pull back, let's wait for the market to continue. Let's wait for the market to pull back, but let's buy continuation if it shows us it's continuation. We see this thing breaking out here of 17, man, we were buying this stock back here, you guys, at $9, $8. Look how long this thing just been on a trend. Just a beast, all right? Shows you how many home runs we hit. Okay, so ENDP for continuation. I like to break out over this thing, and you know, let's just keep this thing rocking here. Follow that momentum. Let me tighten up this time frame for you guys really fast. All right, so kind of wiggly in there, but let's wait for this thing to break out. I don't know about buying this just right now. I see it pulled back way back here to 16 and some change and continued. You could buy that. You'd have a very large stop though. You'd have a very large stop down here at 1650, below 1650. So watch and see what that thing does. It might break below this level, then continue. But nevertheless, this is a really strong stock. So more times than likely, this stock's going to continue rather than break down, because the predominant is to the upside, and it's so much momentum pushing this thing. Look at the momentum pushing this thing. You'd be a damn fool to trade against this. All right, you'd be a damn fool to trade against this. All right, so let's trade with the motions in the oceans, quote unquote. All right, and let's do some good trading. So happy trend following. Let's make some points and let's do what we got to do here. Okay, guys. Let's trade with this market and see where this market wants to see what this market wants to do here. Okay. All right. So enjoy the weekend. Happy trend following, and we'll wait for the market to show us what it's got.